let's do one thing. Let's get Gurmeet Chadha on board, Managing Partner and CIO at Complete Circle Consultants. He's going to, give us his view on a whole host of stocks. Gurmeet, always great speaking to you. Thanks for being with us on the channel. On L&T itself, right? I mean, the story has played out beautifully this year. But what next? Do you see more upsides? There are huge orders coming in the export market as well. Your thoughts?
Well, I think some re-rating could continue because the street probably feared that due to elections there could be slowdown. And I think that's not happening. Some offset, as Vivek pointed out, is happening through hydrocarbon space. In fact, even last quarter, they had a 30% growth there, which is their energy portfolio. The infrastructure still continues to do well, despite street expecting that there will be slowdown. So that grew more than 50%, and even IT services doing, the IT vertical doing well. Also, they've guided that for 9 months they will do almost, more than 1 lakh crore, which is heartening in terms of, and the net working capital to revenue it has been around 17%. They continue to guide towards it. So my sense is that if you believe that India is in an investment cycle, which I think it is, I think it should continue to be steady. Also, one important, we attended a conference and they pointed out that a third of the order book is now private sector. Now, which to me is also very positive for the broader economy as such. It used to be 22%, in the recent interaction with routers, they've said that. And a lot of sectors they highlighted are at 80-85% capacities, which is cement, metals, construction equipment, etc. So overall, if L&T doing well also augurs well for the broader economy as such.
Gurmeet, hi, morning. Not just India in investment cycle, even Saudi Arabia seems to be in an investment cycle. That's the new order. But it's incredible. L&T opened flat yesterday, right? I mean, flat after that order. And then it crept up all the way 120 rupees or so. So, not everything gaps up. Some of these are slow and steady and gives you the opportunity to get in. You just got to be watchful. So that's where we are. Just a quick word, Gurmeet, on the shipbuilders, which seem to be not sailing but flying. Cochin Shipyard was up 20%, Mazgaon, Garden Reach. They take a 2-week break and then rally for another 2 weeks, 2-week break, then rally. But it's been a relentless march upwards. Your thoughts?
Little cautious, Prashant. It's run up quite sharply, the entire space, and some of the probably news in the price. And I think at some point of time we have to realize that the only going up on order book is very different. I think the order books also take time to execute. Some of them have very long gestation periods. One of them, which Mazgaon got yesterday, was a ship repair one. So we have to also see the mix of it, right, in terms of how much would be recurring, how much is one time, what are the different timelines of getting executed. So I think a lot of that news is in the price in a lot of space. There could be some more. Bull market can make things look irrational. We've seen that some of it in some micro caps as well. But this is one pocket I am a little cautious. I think the run-ups, defense, these order book related spaces, the frenzy is too much. Just reminds me of a bit of specialty chemicals post-COVID.
Hi, Gurmeet. Good morning. I wanted to ask you about the metal space. China seems to be unlocking and trying to pump up the economy. If that's the case, then metals does well. How are you all playing it?
So, Nigel, we got lucky with Mukand. There was a change of ownership there, and almost like a special situation. The stock was available at 6-7 times. There was sizable debt reduction. Bajaj Group now owns 74%, led by Neeraj Bajaj and family. They hired good people. They got a very good senior resources from Jindal. And it's a good, turnaround happening in the company with ownership change. Other than that, we have to be more tactical. I believe we are in the investment cycle and we are in a commodity, super cycle, if I call it. And, it's just that you have to pay the right valuation. These stocks run up too quickly and then correct too quickly. It's always a high beta sector. So, we are invested in Mukand, and we have, some interest in Tata Steel as in valuations become, more reasonable, and also Hindalco. But it's not part of the core portfolio. It's largely tactical, and you make some money and you take them chips off the table.
Okay. The other space that has done really well and is picking up pace is this entire EV space, right? I mean, we were just talking about how there's so much happening in this vertical, whether it's Ashok Leyland launching a new range of EVs, Hero investing in Ather, Varroc investing in, a renewable energy JV. From this entire ecosystem, where is there still price appreciation, you think?
No, I think I continue to like both Tamo and M&M, especially, so I just saw the Nexa launch yesterday. I mean, I'm very impressed with what they're doing on the EV front. Clear lead there. Overall order book, if you see for JLR is pretty good. The right mix of Defender, Range Rover Sports, which gives some comfort on margin, and not really seen free cash flows on Tata Motors for a long while. Reported almost 13% EBITDA margin, 3,000 crore plus PAT. Sizable debt reduction, balance sheet improvement. And I think all three cylinders, which is commercial vehicles, JLR and PVs, I think they're doing well. So I continue to like that. And I'm very impressed with the lineup they have in terms of Tata Harrier EV and some of the other models. I think it could be a big moment if they get some of the execution right over the next few years. But, obviously the stock has also run up. We continue to like M&M, still trades at 16 times. There was a bit of a blip because of the RBL investment, but I think with the second half, even the tractor sales picking up as we head into state elections, I think that part should meaningfully contribute, other than they getting back to 20% market share in SUVs. And we are now trying to see the entire value chain in terms of where do we fit in. We are looking at some very small companies also, researching more on them. In fact, I've started liking Ashok Leyland as well. I think especially the higher tonnage vehicle sales are picking up. And the LCV front also, they seem to be doing pretty okay. So that's something, if you're a believer in investment cycle and, it's the way, guidance is coming from L&T, I think that should also probably do well.
Gurmeet, this stock has seen a 70% rally in the last 1 year. At this price of 800 rupees, is the risk reward still favorable for long-term investors?
Slightly on the higher side on valuation, but what is good is that the capex is doing well. So, for example, for wagons, they are talking of 12,000, going up from almost 8,000. But coaches also from almost 250 to 800, considering the Vande Bharat, order book. And also, I think one JV they have on the forging wheels, where they have, I think it's with Ramakrishna Forgings. So that's three verticals there. Obviously, the larger one being the top two, both wagons as well as coaches, which we call rolling stocks. So it's a play on railway capex, and I think government has really up the budget there. But would be happy probably buying it. The portfolio manager tells you that if you can get it maybe a little cheaper, it would be better.
Okay, all right, absolutely. Why not, right?